we don't have to replace the CNY or the yen or the euro or the dollar for Bitcoin to go from where it is to 10 million a coin. All we have to do is educate the people that own everything in the world that Bitcoin is digital property. And once they understand that Bitcoin is digital property, they realize they're overexposed to physical property. They're overexposed to physical companies. They're overexposed to physical stocks. They're overexposed to physical collectibles. They're overexposed to gold. And people aren't stupid, right? They're rational. Once they understand this thing is better, they just start selling the thing that is imperfect and buying the better thing. And the capital flows from the traditional 20th century economy into the digital economy of the 21st century. Bitcoin's price adjusts up because the supply is fixed. As the price goes up, awareness increases. As awareness increases, investment in the ecosystem increases. As that increases, regulatory clarity increases. People build more products like the spot ETFs. They build new exchanges. They build new custodians. Conventional banks offer custody services. Conventional banks offer credit services. Insurance companies get involved. Politicians get involved. Eventually, big tech gets involved. Pretty soon, it gets built into the iPhone. It gets built into Google. It gets built into Microsoft. As it gets built into these things, retail and institutional awareness builds. As it builds, people realize they're underexposed. New use cases get commercialized. People embrace the new use cases. Demand increases. The price moves up. Rinse and repeat. The entire thing is a virtual cycle, and it's a reflexive cycle or a positive feedback loop. And because Bitcoin is just pure money, right? It's just as effective at 100,000 a coin as 10,000 a coin, and at 1 million a coin, it's just as effective. And at 10 million a coin, it's probably more compelling at 10 million a coin than 1 million or 100,000 a coin. It's kind of a universally scalable asset that gets less risky. The only thing that's going to change, in my opinion, is when it was super risky and scary below 10,000, you were getting 100 to 200% a year annualized gains. And then when it got a bit more understandable between 10,000 and 100,000, your gains go to 40 or 50% a year. And then at some point they go to 30 and then 20. And you know, in the extreme, if everybody in the world understood Bitcoin, it would be 20, 30, 40% of the wealth of the world. So it would be 200, 300 trillion in today's dollars. And then the price would be appreciating at the rate of global inflation in the fiat currency. So if global inflation rate remains at 7, it would still be appreciating at 7. And then it would appreciate a little bit more because of the productivity of the people that adopt it as a treasury reserve asset. So like when MicroStrategy makes money and cash flows, we sweep our cash flow into Bitcoin. So we're dollar cost averaging or we're Bitcoin cost averaging. And when you earn money, if you understand Bitcoin as your treasury asset, every year you make some more money, or every month or every quarter, and so you buy a bit more Bitcoin. Anybody that has capital to invest, they should take a minimum of a 10-year time horizon. And I really think a 100-year time horizon is the right time horizon to get you to think rationally. So now the question is just, how do you want to have your portfolio allocated? Some mixture of scarce, desirable assets. I've already laid out the case for why Bitcoin, I think, is the most scarce, most desirable asset. And if you're not going to hold Bitcoin as the scarce, desirable asset, then I think you have to own something else. Like I respect the royal family of Japan or Britain for holding real estate in the middle of their respective cities, right? Tokyo and London. Have a scarce, desirable asset you're going to hold forever. I don't think trading is a good idea for anybody other than a professional. So if you look, maybe 0.1% of the people, if you're a professional with proprietary models and proprietary equipment and proprietary access, you might be able to trade. But 99% of people cannot trade successfully. I don't think I can trade successfully. And if you look at the statistics, If you remove 1% of the trading days, the 1% most profitable trading days from your activity, there is no return. Like you would get a 7 or 8% return per year on stock portfolios if you just hold them for 100 years. But if you take out 2 days a year or 3 days a year, you actually get a negative return if you take out the 3 best days. So if you don't guess the 3 best days, if you're not long the 3 best days out of 365, there is no return.